You shouldn't be intimidated. Everyone can do well in the stock market. You have the skills, you have the intelligence. It doesn't require any education. All you have to have is patience, do a little research. You've got it. Don't worry about it. Don't panic.
Hello everyone, my name is Kaseem. Welcome to the $1 Million Challenge. In today's video, we are going to take a look at Peter Lynch. He's a legendary investor. He's one of my favorite investors. You know, I love Warren Buffett. Another person that I like is Peter Lynch. So we are going to take a look at some of the lessons that he has put out there, you know, since the 60s and 50s. Some of that stuff can still be put to use in today's market. And this is going to be like a reaction type video. And I'm also going to take a look back on my own portfolio and share with you how I'm looking at this recent downturn that we've had, you know, in the early part of 2022. So we're going to take a look at all that stuff in today's video. So here we are. This is the video that we are going to look at today. And Peter Lynch used to work for Fidelity, okay, the brokerage company, and he managed a lot of money for them way back in the days. And, you know, I was just reflecting on, you know, a lot of the things that is going on in the markets, because usually when the markets are down, I usually like to go out there even some more, trying to research things like this, things like what we were experiencing now. As it happened before, how did people manage through it, especially investment managers? So that's why I'm bringing him on to share him with you guys. If you don't know about him before, listen, and you know, maybe you might be able to pick up a thing or two from his advice. So let's get right into this video and just check out what he has to say.
Everyone can do well in the stock market. You have the skills, you have the intelligence. It doesn't require any education. All you have to have is patience, do a little research. You've got it. Don't worry about it. Don't panic.
Basically, that is what I tell people all the time as well. You know, if you guys look at my past videos, you know, especially the ones that my dividend updates on my personal portfolio, I say the same thing all the time. Don't panic. You know, there's really nothing to worry about. Let's stay focused. You know, let's keep buying into all these great companies that are producing things that people want to use. And, you know, legendary billionaire investor Peter Lynch is giving us advice saying the same thing, you know. So let's get back into it.
In 1990, Peter Lynch retired as manager of Fidelity Magellan, the nation's
in 1990, you know. So some of you guys were not even born when the guy retired, you know, so.
largest stock mutual fund and one of the most successful. In 13 years, he drove Magellan to a 2,800% gain.
Massive gains, 2,800% gain for $1 billion fund. Massive.
Quite simply, Lynch has been recognized as one of the greatest money managers ever. He beat the stock market for so long not by timing the market, but by picking the right stocks. Of course, no one can promise you Peter's record, but you can learn a lot from him.
Sure.
And you don't need a $1 billion portfolio to follow his rules.
Sure. That's why I keep telling you guys, the way that I manage my portfolio, I'm so diligent with the companies that I'm investing in, and I research them, and I make sure that even if it's $20 or $100 or $200 that I'm going to invest right now, I want to make sure that that $200 can be earning me some money. So that's dividend. And that $200 has the potential to grow. It's the same thing that someone that is managing, you know, $10,000 portfolio, or $100,000 portfolio, or $100 billion portfolio. They're going to be looking at the same thing. The only difference is the person that's managing a $100 billion portfolio, they have bigger money. They can have a team, you know, stuff like that.
Hi, my name is Peter Lynch. For 13 years, I managed Fidelity Magellan Fund. Those were 13 amazing years. 9 times the market declined by 10% or more, and I was very consistent.
10% or more, like that is the same thing that I'm currently going through right now. The portfolio this year is down like 10% for me. So I'm going through it, you know.
Magellan Fund fell 10% or more. I learned a lot of lessons. I think they're true now. I think they were true 20 years ago. I think they'll be true 20 years from now. I think I can help you do a better job of investing.
Sure.
You can't learn years of stock picking experience in one night, but you have better stock picking skills than you realize, and you have advantages that no one on Wall Street has. In Stock Shop, I'm here to help you find them and use them. You may be wondering why stocks are so important for a long-term investment program. The short answer, over time, stocks produce better returns than other investments. The past 60 years, stocks have returned about 10% a year. Bonds have averaged 6% a year. Treasury bills or bank CDs around 3%. That doesn't seem like a big difference, does it? But the power of compounding makes an enormous difference over time. Suppose you invest $50 a month and earn 6%. After 30 years, you have over $50,000.
Thanks. I urge everybody to go ahead and do the same thing. Do your compounding interest. Just Google compounding calculator and put all this information in for fun and see what $50 a week would do for you. What investing $50 a week, what it would do. Investing $100 a month, what that would do for you.
There's a lot of
So this is another interview with him in on C-SPAN, and you know, please, this is an old video. You know, trying to bear with the quality, but it's all about the information. So please mind that.
This is what I'm going to cover today. So it should be on your desk. These are the key points that I've been using for 25 years. I think they're true then. I think they're true today. I think they'll be true in 25 years. And I think that's what investing, successful investing is all about. And
sure, you know, a lot of things that worked back then, it's probably still going to work now. You know, if you put your money into companies that are producing things that have the ability to raise prices, that people go and purchase from them all the time, you're not going to, you know, you're not going to lose your money. I mean, matter of fact, you're going to make money.
The first point is know what you own. I can't believe how many people own stocks and they couldn't describe to an 11-year-old in 2 minutes or less why they own this thing or what it is. If you actually pin them down and you put a whip to them, they'd say the sucker's going up. That's the only reason they have for them.
Know what you own. You have to know the stocks that you own. You have to know the kind of businesses they're into. You have to be able to tell someone that is new to stock, yeah, this company that I own, this is what they do. That's what it means by you have to be able to say it to an 11-year-old, obviously.
And this is the normal kind of company that people buy. It's a very simple story. I own a lot of companies like this. They make a relatively mundane product. It's a 1 megabit SRAM CMOS bipolar RISC floating point gate I/O array processor with an optimizing compiler, 16-bit dual port memory, Unix operating system, 4 Whetstone megaflop polysilicon emitter.
You guys notice that a lot of what he's just talking about, he's just trying to be sarcastic right now. Basically, he's talking about all this gibberish that most people would not know anything about. That's the same thing with what's going on, you know, with the cryptocurrency space. There's a lot of junk out there that, you know, people don't know much about, but they think is the next big thing. You know, look at the NFT craze. You know, how many people have been scammed so far? It's just mad. You got to know what you own. Like in the crypto space, I own Bitcoin and I own Ethereum because I can easily understand them. I can easily understand Bitcoin. I can easily understand Ethereum. I don't understand everything else. So you got to know the things that you own. Same thing with stocks, by the way.
With a high bandwidth, that's important. 6 gigahertz double metallization communication protocol, asynchronous backward compatibility, peripheral bus architecture, 4-wave interleaved memory, token ring interchangeable backplane, and they do it in 15 nanoseconds of capability. Now, if you want a piece of shit like that, you will never make money. Never.
Facts.
Some come with more whetstones, less whetstones, big mega flop. I mean, what do you do if this thing goes from 12 to 9?
I hope you guys get what he's trying to say. That the product, the thing that they into, the thing that they're building, it's hard for most people to understand it. You know, that's why I think, I mean, I own Palantir, I know what they do, and you know, a lot of people are a little bit skeptical because not everybody can do all the research that most, like I'm doing. Like,
you buy more, you walk around the block, I mean, you call your friends. I mean, what the hell do you do with something like that? People buy this stuff. I mean, I buy stuff like Dunkin' Donuts and
simple
Stop and
stuff.
Shop and CVS and made money on all those. And Sally Mae was just here, you know, right before me. I mean, this is a stock I bought that they had a great name, Student Loan Marketing. I mean, who would ever buy anything like that? It's a great name. If you heard the story, I think 100 people heard the story. In fact, I had dinner last night with Al Lohr and Ed Fox and Paul Carey. We're all in that roadshow in 1983. I think if 100 people looked at Sally Mae, they would have bought it, but 100 people wouldn't look at it because imagine loaning money to students. Imagine doing anything to students. And it was a great story. It was simple. And
so you guys get what I'm saying? Like, he was like, hey, look, listen, student loan, you know, this company is into student loan. Well, it seemed like a great business. Even though at that time, a lot of people think it was junk. It just didn't make sense. But it made sense to him. And he invested in it, and he stuck with it.
No one looked at it. So that's the kind of stocks I like to buy. But I'm telling you, people don't do this. And I'm talking sophisticated people, unsophisticated people. They don't know what the company is, what's the story. And it's very important to know it because it doesn't always work. And you have to keep posted.
Sure. Sure.
Now, here's a big point. Remember this one. It's futile to predict the economy, interest rates, and stock market. I mean,
It said, I hope you guys get that. Futiles predict the economy, interest rate, and the stock market. You know, like on this channel, I don't do too much of, you know, economical predictions. For the most part, all I do is I just analyze the data that we have now, and I try to infer as much as possible. But I'm not going to be out here saying, oh, in the next 6 months, the market will crash. You know, nobody knows. Nobody knows what's going to happen in the next 6 months. Nobody knows what's going to happen in the next, 12 years in the stock market. All we know is a lot of the companies that are on there that we can buy their stuff, they're most likely going to be bigger than what they are today. That is the point that he's trying to make in that section there.
People keep trying to do this. I mean, this would be useful. I would love to know when we have a recession. I'd love to know when interest rates can go up or down.
Mm-hmm.
I'd love to know when the stock market's going up. That would be helpful. I would like to get next year's Wall Street Journal. Unfortunately, you don't get it. I remember in 1982, we had a lot of people in this room around for 82. We had 20% prime rate, 15% long governments, double-digit unemployment, double-digit inflation. I don't remember anybody telling me about that in 1980. I remember anybody telling me about that in 1981. But in 83, I remember they said, well, the economy's bounced back. We had a recession in 85. In 85, they said we had a recession in 86. In 87, something happened.
This is 1985, 86, 87. This is a long time ago. Right now is 2022. Does that sound familiar? Does that sound like what we're hearing right now? On YouTube, on the internet, on all the news articles, negativity sells. Negativity sells. But those people that are always positive about the market, they all end up winning because they know at the end of the day, things will work itself out and things will continue to be good. Now, past performance is not necessarily the best prediction of the future.
Celtics lost 7 in a row. Something bad in 87. They said for sure we'll have a recession in 88. And they said 89 for sure we'll have a recession. And then 90, we're supposed to have the so-called soft landing, which we never had. So I always said if you spend 13 minutes a year on economics, you've wasted 10 minutes.
So true.
And all you need to know about the stock market is it goes up and it goes down, and it goes down a lot.
Mm-hmm.
And that's all you need to know. Again, it'd be terrific to know what's going to happen in the economy, but I deal with facts. If inventories are going up, if copper prices are going down, if room occupancy is going wrong.
That's why with me too, when I analyze a lot of the things that I analyze with the companies that I'm working with, I always like to look at their business. How is their business doing? You know, is their business doing well? Because sometimes you have to detach the stock from the company. You know, this is what the stock is doing right now, but this is what the company is doing. Now, when you analyze the company, is the company doing well? Are they doing what it's supposed to do? Are they producing goods and services? Are people still buying the stuff? Are the stuff in demand? Those things.
The way people building too many hotels. I look at freight car loadings when I own railroad stocks. I deal with facts. I don't deal with people tell me something's going to happen in the future. You might as well call the psychic hotline for that stuff. You get a better average.
Psychic hotline.
You got plenty of time. This is true with Salome, this is true with Dunkin' Donuts, this is true with Stop and Shop. People are so insistent. I'm that way too. I have to fight it. They have to buy a stock. Let's see, it's now 501. I haven't found a stock yet today. You know, I got to find a stock before sunset. You know, you can buy Walmart 10 years after Walmart went public. Let's say you're a very careful investor. You waited. You said, I don't know if this company can make it. You waited for Walmart to roll it out. You could buy Walmart 10 years after it went public and made 30 times your money. 30 times your money. 10 years after it went public, they're only in 15% of the United States. 1.5. They haven't saturated the 1.5. You could say, well, why can't they go to 17? Why can't they go to 19? I mean, why don't I take a leap of faith here? Why can't they go to 26?
That's the kind of thing too that I'm looking with something like Tesla. You know, the general car market, right? Tesla has only penetrated about 2% of the car market. So who is to say that they're not going to get to like 30% since the world is moving to electric vehicles? Who's to say they're not going to get to 30? Who's to say they're not going to get to 40? You know? So that is what he's talking about right there.
All they did for the next 3 decades was roll it out. You could buy Walmart. If the day they went public, you would have made 500 times your money. If you waited 10 years in Walmart, you made 30 times your money. You got plenty of time in this business. Now, what I'd like to talk about is what I call the 10 most dangerous things people say about stocks. Here's a good one.
This part, I'm just gonna skip this part and get to the next part that I'm gonna share with you guys. That I think is quite important.
Kaiser Steel, aluminum, and they sold off all the businesses. You got about $55 a share. But if you didn't know the story, and the stock went from 15 to 11, and you're just saying how much lower.
So he's talking about knowing the story of the company. So like, if you know the story of the company and you believe in the company and you know that, okay, I think this company is going to do well in the future, and the stock price is down, the earnings are good, you know, they're growing their earnings and all that basic things are good, it will make sense to buy the stock.
And with children, I think if you don't have any kids, you got to rent some kids for the weekend. Get a 7-year-old and ask him if he knows about the money supply, you know, how fast it's growing. Ask him if he knows about the shape of the yield curve is the wrong shape of the yield curve. Or that we're 48.3 months into the economic recovery and the average recovery is last 52.3 months. You know, ask an 8-year-old if they know about that. 8-year-olds have a very high expectation about the next 20 years. That's what you need to do. The more you get away from 8-year-olds.
Having a high expectation of the next 20 years. Basically, he's saying you should be childlike mind. You should be childlike when you're thinking about the stock market, especially if you're investing into good companies. Don't be a dumb, and because he just talked about it in the beginning. Don't go and invest in companies that you don't understand, because the one thing that he's talking about is you have to understand what the company does. Like, you have to know the company. So if you do that and you know the company and the stock is down, well, your expected return will be higher when the stock is down. So those are the things that he's talking about.
The more you wait for 11-year-olds, the more you start reading these crazy things you read over the weekend. In fact, from 1955 to 1985.
This is a crucial point that he's trying to make here.
The stock market went up a grand total of 1,000 points, but it was down 800 on Mondays. So it was therefore up 1,800 on non-Mondays. It wasn't an accident. The stock market went down October 19th, 87 was a Monday. People over the weekend become economists and portfolio strategists. I mean, they're bull if they take their lunch on the way to work. In fact, I knew very well the market was going down in October of 1987. Dave Elson remembers that. It was my first vacation. I was going to take in 6 years. And we decided to go to Ireland, and we stayed at all these little cottages and play golf. And I left on Thursday after the close of trade. Market was down 55 points, which wasn't a good start, but it was down 55 points. And we got over there, and because of the time zone, we were able to do what we wanted to do and get down to Cork, and called in the market was down about 118. And I said to Carolyn, if the market was down Monday, we better go back. Well, we're already here, so I was to stay for the weekend. So as you know, the market went down 508 on Monday, so I flew home. Because my fund had gone from, I think, from 13 billion to 9 billion in 2 working days. And I,
So he said his fund went from 13 billion to 9 billion. So that means it's dropped down that much in 2 days while he's on vacation.
It was, the trend here is not positive. Like I could do something about it. But there's something when they called, they wanted to say, well, what's Lynch doing right now? Well, he's on the 10th hole. He's even part of the front 9, but he's in a trap right now. This could be a double bogey. This could be a quadruple bogey right here. Could blow the entire front 9 right here. This is not what they want to hear. So I had no idea when the market's going to go down, and no idea when it's going to go up. I'm totally shocked. The market was 4,000 2.5 years ago. A while ago, it's 8,000. I had no idea about this. Very surprised me. But I'll guarantee you, the market will be a lot higher in 15 years.
Fact.
It'll be a lot higher in 25 years.
Fact.
What it's going to do in the next 1 or 2 years, I don't have any idea.
Sure.
And if somebody in this room knows about it, they're not telling anybody. Or they're not in this room, they're down in Palm Springs.
Because they've made so much money. That same thing with, like, when people are trying to predict the market in terms of, the market is going to sell off in the next 6 months. Nobody knows. The only prediction that I think still make a little bit of a sense, that it's more factual, it's when you're trying to trade, whether day trade or swing trade, you can basically predict. Even at that, it's still a little bit of a gamble. It's just a calculated gamble,
They made $1 billion. Or if they know anything about interest rates. Because in interest rates, you can be right 5 times in a row in 10 grand, you can have $2 billion. It's not that many people with $2 billion. There's a lot of people predicting interest rates. Did you ever think about that one? Just 5 times right in a row in 10 grand, $2 billion. If you write 7 times in a row, you can have the GNP of, the United Kingdom. It's a big number. So I don't worry about that. I know we've had 96 years of century, and the market's fallen 53 times.
Sure.
We've had 53 declines of 10% or more. So 53 declines in 96 years. Once every 2 years, you have a 10% decline.
Once every 2 years, there's a 10% decline in the market. Once every 2 years, and 53 times in 92 years or 93 years, the market has dropped 10%.
Of the 53 declines, 15 have been 25%.
Okay.
So
out of 53 years, there's been 15, 20% or more decline.
15 in 96 years, but once every 6 years, the market falls 25% more.
Okay.
That's what we call a bear market. You know that. And it's going to happen. I don't care when it's going to happen. I would love to know. Obviously, it would be very useful to know when it's going to happen.
Sure.
Doesn't make a difference to me. Corporate profits will be a lot higher 8 years from now, a lot higher 16 years from now, a lot higher 30 years from now. That's what I deal with.
Sure.
I'll be glad to answer your questions. It's great. Enjoyed it.
Sure. This is a great insight. Really, really great insight. So if you take a look at what Peter Lynch is saying, basically, a quick glance at my portfolio here, right? If you guys can see in the past, this 2022, in the past, let's just run through this. Let's run through this. For the day, it's down a little bit. Let's see where it's the dates that is down the most. I think in the past 3 months, that's when it's down the most. Okay, so in the first quarter this year, you guys can see the stock market for me, my portfolio has basically just been wrecked. It went from a high of $90,000, go all the way down to a low here of 75. From 90,000, and this was in January. This was in January 2022. You guys can see the day right there. Went to a low of 75, right? Calculate that difference. It's huge. And then it went up a little bit from 75 all the way to February 9th to 83. And then all of a sudden we had some sort of flash crash. I don't know if this is a glitch, but it went down all the way to $67,000. Mind you, not too long ago, just in January, the portfolio was at 90,000, and then it dropped to $69,000. So that was really crazy. And right here where we are today, the portfolio is roughly about $80,000, $82,000. Now, as for me personally, nothing has really changed in the past, 3 months. As you guys can see, net cash flow, the plus right here, that means net cash flow, new money coming into the portfolio. You guys can see that it's $10,000. I put in $10,000 in the past 3 months. Obviously dollar cost averaging into various companies, and in general it's still down 10%. Maybe this is going to be one of those years that Peter Lynch is talking about, that the portfolio will be down 10%, even 20%. But if we take a look at where that money is actually going, you guys can see it's going into my passive income, my ETFs, Berkshire Hathaway. These are places where I have my companies that I own, that I want to own. This is where I have them stored. And if we take a quick look at this sector here, let's say we pick like a random one. Okay, before we even pick the stock, take a quick look at this section here. In the past 3 months, it's been down quite a lot. It went from a high of 53,000, dropped sharply to 45, and then came back up. I think that's probably a glitch. But either ways, if you take a look at the past 3 months, in general, past 3 months here, in general, we are basically down on the portfolio, okay? But this don't really change anything for me, because if I take a look at the things that I own, right? We have company like Costco, which I own here. We have Jumia, we have Disney, Target, Home Depot. Now, these are all companies where they have pricing power. They can raise the amount of money they sell their product for, because if it costs them more money, they're going to raise the price that they sell the products for. So my job now as an investor is to scour around all these companies and be able to pick where I can put my money. So it's to look, okay, which ones are down the most, which ones are earning the most, what's their business like. That's what Peter Lynch was talking about when he's saying that you got to look into your portfolio and see which companies make sense for you to buy. And if your conviction in them is high, then you just keep on buying them. That's the same thing that I'm doing when it comes to my electric and transportation section here. If I take a look at Tesla here, I have relatively decent amount of money in Tesla at this point, that I have in the $25,000 that I have in there, but it's down 12%. Now, in the meantime, the company has, produced, record amount of cars, record amount of delivery, 2 new factories. Should they be down 12%? I don't know, but the stock market, I think it should be down 12% in the past year or so. But for me, I think most likely in the future, 10 years from now, it's going to be way higher than this. I'll keep on buying. So these are some of the points that Peter Lynch basically talks about, and he wants us to be cautious about and look into, because in general, you don't have to be a genius to invest. You just have to know basic things. Is this company cheap? Okay. How do I know that the company is cheap? Which metrics do I use? Stay tuned. I have a couple of videos coming up where I'm going to be talking about those things. There's a lot of tools out there, that you can use to evaluate companies in a glance, and you can be able to tell, hey, maybe this company would be a good buy. So those things, are there for you to be able to evaluate the companies that you own or you want to own more of easily. So yeah, that was good information from Peter Lynch. So thank you very much for watching this video. If you find value in today's video, give the channel a sub. If you don't, hopefully you check out all my other content, and if you like those, you can check them out. Because of them, you can give the channel a sub. Anyways, thank you for watching. I appreciate you. Until next time. See you later. Love you all. Bye.